Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Well, it's here, and I was wrong. So what am I talking about? Well, what's here is the global depression. Was I wrong about the global depression? I don't think so. We're going to look at indicators today that tell us that it is here, right now. So what was I wrong about? Well, I believe I was wrong about where ground zero would be located, because I thought the country that would be ground zero for this global depression would be Germany. And now I think the data is indicating that it's in another place, and that place is China. So as we see here in this headline, it says, China's market crash could be the last straw for many foreign investors who leave permanently, think tank says. So, guys, the Chinese stock market has lost $7 trillion in value since its peak in 2021. Shanghai Composite's down about 22% over that time period, but it had a 10% drop at one time last month, year to date. So keep that in mind. That means for the month of January, essentially, there was a 10% drop. Now, it's rebounded quite significantly since. But guys, that's an indication. I would expect that to be temporary, because when you have these volatile moves in a stock market, it's usually on the way down as part of a correction or an outright crash. You don't see that type of volatility in a rising bull market. You just don't. I mean, anybody with experience in the markets would tell you that. We've also seen lots of intervention by the Chinese government to try to delay the inevitable, try to keep this crash from taking place, including the banning of short selling, which is another thing that you typically see in market crashes. We saw that in the United States during the great financial crisis, when bans on short selling were instituted on, I think, all the big bank stocks, if not a much wider array of stocks. So guys, China is in trouble right now. So we're going to look at some things today. I'm going to run through some headlines. I'm not going to read all of these articles, or it would take hours to go through what we're going to look at today. But I'm going to hit these really quick. I will put links to all of these articles. I'll pin them at the top of the comments if you want to go read more in depth in some of these pieces to see exactly what we're dealing with. But why is China facing this crash? Well, one of the reasons is this right here. So this says the 2008 housing bust suggests China is only halfway through its property crisis. Here's how the downturns compare. Now, a large percentage of the Chinese economy is built upon its housing. Here, the people poured money into investments in housing and apartments almost as their retirement plan in China. And we're seeing a crash there, just as we saw in the United States and other property markets during the great financial crisis. So let's read what this says. It says, the 2008 U.S. housing market crash stands as one of the worst collapses in economic history, and its lessons remain relevant as China deals with its own real estate crisis. Beijing is facing a narrow policy path toward an economic rebound this year. Let me tell you, there is no narrow path. There is no path. And we'll get to why in just a moment. And the International Monetary Fund has warned that the country is in the midst of a historic property downturn, matched only by the most severe collapses of the last 3 decades. It says, as things stand, China's housing downturn that began in mid-2021 still has no end in sight, according to Goldman Sachs. Housing starts and new home sales in the country have dropped 64% and 52% respectively since peaking at the end of 2020, and analysts expect the country's inventory glut to keep both variables depressed for several years. So guys, there is a severe property collapse going on in China. And then we have articles like this. It says, for many in China, the economy feels like it's in recession. Well, that's because it is, right? And again, you can check out the link to this article if you want, but they go on and talk about the high rise in youth unemployment, which is another marker of a very sick economy. And they give an example of 30,000 government jobs that were open and 2.6 million applicants for those 30,000 jobs. And they interview a woman who had applied for 100 jobs in her field and has yet to get one. And we see this from Zero Hedge. It says, Chinese consumer prices suffer worst deflation since the great financial crisis, and producer price pressures persist. It says, overnight saw a double deflation day in China as both consumer and producer prices continued to deflate on a year-over-year basis, with the headline, Consumer Price Index deflation worsening, and the producer price index deflation easing a little. It says the consumer price index dropped 0.8% year over year in January, the weakest since September 2009. So the depths of the great financial crisis, and worse than economist expectations. The producer price index fell 2.5%, marking 16 straight months of deflation for factory gate cost. And then we see pork prices drop 17%, helping drag down food prices by 5.9%, the biggest decline on record and data back to 1994. Now, many of you may see this and say, declining prices, that's fantastic, especially declining food prices. It would be nice if the grocery store prices started to decline. But keep in mind, we saw this during the Great Depression as well. We saw a lot of farmers go bust. They had record crops, bumper crops, early on in the Depression. And then they watched in horror as the market prices for the crops that they had plummeted. That's what you see in the deflationary bust, a deflationary spiral. And I believe we're seeing that in Japan right now. They are on that path. It is very hard to get off of that once it takes place. And guys, I think as big as the Chinese economy is, this is just a vortex that's going to draw in the rest of the world's economies one by one. So let's take a look at why. Let's start by looking at this Forbes list right here. So this is from Forbes. It's a list of the top 10 economies in the world. And I assume this is correct, right? I didn't do extra super research to find out, but it generally looks correct based on what we know to be true. So we have the Chinese economy here ranked as the number 2 economy. They break up the EU into individual nations. So the EU isn't part of this, but some of its member nations are. But here we see, China is 4 times the size of Germany. And we were talking before about Germany being ground zero for the start of this global depression. But when we have China actively in deflation, because that's a bad sign for what is coming. And it doesn't end there. So we'll come back and we'll look at this list, but let's look at what else is going on, because this news hit earlier today. I'm producing this on Thursday night, so you're probably seeing it on Friday. But it says Japan unexpectedly slips into a recession. I'm not sure unexpected by who or whom. I don't know how you would say that. But unexpectedly, really? But they're in recession now. It's official. And again, I'm just going to flip through these headlines. Otherwise, this would be a multiple-hour video. But it says, Japan is no longer the world's 3rd largest economy as it slips into recession. Well, Who is third? Well, it's Germany, right? Is Germany growing? Maybe that's how they got to that number 3 spot. Well, let's check it out. Oh, no. Germany's days as an industrial superpower are coming to an end. Or how about this? Germany is in really big trouble. Perfect storm of terrible trends paints bleak picture as distress is spreading to other sectors. Or how about this one from CNBC? Germany's economy is on shaky ground and glimmers of hope are few and far between. Or how about this one? Germany in permanent crisis as property market crumbles. So they're having a housing crisis as well. So let's go back and look at our scorecard of the top 10 economies. We have China, I believe, they say recession. I think it's worse than that, a deflationary depression. We have Germany, not officially in recession yet, but they're in recession. They've been shrinking for a year and a half. It's just their government's better at hiding the numbers than some of these other governments. Japan officially in recession. Well, how about India? Maybe India's doing pretty good. Well, let's go see. Wait, nope. India may face recession risk in 2024, warns finance minister. So that would put recession, maybe a recession. How about the UK and France? Well, the UK came out today as well. Oh, they're in recession as well. So the UK is in recession. How about France? Well, France is to lower its growth forecast as EU outlook worsens. That doesn't sound too good. So who's next? Well, we've got Italy, Brazil, and Canada. About Italy. The 5 challenges facing Italy's economy in 2024 in its latest forecast. The Bank of Italy estimates GDP will slow down further in 2024, down to 0.6% from 0.7% in 2023. So, hey, we've got a winner. Italy is going to grow, at least as they forecasted, 0.6% this year. So, hey, at least they're growing, right? They're the only one so far that we've seen. But 0.6%. I'm sure, with inflation being 6-7%, whatever it may be there, the people of Italy feel happy that their economy is growing 0.6%. About Brazil. Oh, Brazil Central Bank trims 2024 economic growth forecast. Brazil's economy is losing steam. Okay, so who was left? Canada. What about Canada? Well, this sounds good. Economic bounce back at the end of 2023 could push back rate cuts. So maybe Canada will offer us some glimmers of hope. Let's see what it has to say here. And close this video out. It says Canada's economy appears to have ended 2023 on a stronger note than expected, which economists say could push back the timeline for interest rate cuts this year. Statistics Canada reported on Wednesday the economy grew 0.2% in November. That's 0.2%, marking the first expansion in 6 months. A preliminary estimate suggests real gross domestic product increased 1.2% on an annualized basis in the fourth quarter, following a decline of a similar magnitude in the third quarter. So the third quarter was down. And maybe I know I'm not the best at math here, but the fourth quarter would be October, November, and December. And according to this, in November, the economy grew 0.2%, and they say was the first expansion in 6 months. That implies October, the economy declined, even if it was 0.1%. So how does a preliminary estimate say they grew 1.2% in the fourth quarter? I mean, that would imply almost 4% positive growth in December with no data to suggest that. So what they mean by preliminary estimate is we're going to make up the data and we're just going to say that everything went well in the fourth quarter, because if we say we expected that it declined, well, then that would make 2 declining quarters in a row, which is the technical definition of a recession. And we don't want to say that until we absolutely have to. That's what that means. And guys, make no doubt about it, Canada is not going to grow its economy this year. If you live in the United States, you're used to hearing about 30-year fixed mortgages. In Canada, they do not have that. They have 5-year fixed mortgages in most cases. And your rate bumps up at refinances. In this case, it will bump up based on the higher interest rates every 5 years. So somebody that bought a house in 2019 is going to see their house payments go up substantially in 2024. And if they can still afford to live in their house at the higher payments that we would see under these interest rates, then they're going to have a lot less to spend on other items in the economy. So do not expect that Canada is going to grow this year. So let's go back and look at this. We've got our top 10. So got the United States. Talk about that in a second. We got China pretty much in a deflationary depression, Germany shrinking, Japan official recession, India slowing growth, UK is an official recession, France is trimming estimates, Italy 0.6%. That's our bright spot in the top 10. Brazil changing estimates, declining estimates. We're not sure how that's going to go. And then Canada making up numbers so that they don't have to claim yet that they're in recession. But guys, they're in recession, right? we know how to read in between the line on these news stories. They're in recession. So here we have the 2nd through 10th largest economies in the world, all in recession. That leaves the United States. Do you really think we could see all of these economies shrinking and the United States just stands apart? Is the United States really all that different? I don't think so, guys. Let's look at just a few of the headlines we see here. We see household debt tops $17.5 trillion, and Americans are feeling the strain. How about this one right here, which is loading? Trucking sector layoffs are happening. Historically, this signals recession. So we see when these trucking layoffs have occurred, it's a sign that recession is pretty much imminent. And then we see retail sales post steepest decline since March. So we're seeing the economy roll over. And just like we looked at these trucking sectors, layoffs indicate recession is near. We've talked about watching this metric right here, the 2-year, 10-year spread. When this goes positive, then I think we can officially declare the global depression has arrived. I mean, I think it's here already, but historically, going back 70 years, this has a 100% track record of predicting recessions when this number, this is called an inverted yield curve. That's why the number is negative right now. When it goes positive, when it uninverts, that's when the recession hits. If you read the media, they'll make a big deal about inverted yield curves. thinking that indicates the recession. No, it does not. It's when it uninverts from being inverted. So when this number goes positive, buckle up, guys, because it's only a matter of time before everybody realizes. And as we looked at all these headlines today, it should be clear that something is happening. All of these global economies simultaneously are cutting estimates, going into recession. We're seeing this happening all at the same time, guys. We've been talking about this for a year and a half now, and I think we're finally here. I believe next month we will see a banking crisis reemerge in the United States. Based on the indications we just looked at, I would expect that to quickly become a global banking crisis. Could they kick the can down the road a few more months? It's possible. I don't know. I'm not a prophet. I don't have a 100% track record on these things. I'm just making observations of what's going on out there. But guys, this is basic math. The world is filled with massive amounts of debt. Much, much more debt than we had during the great financial crisis. And guys, it's so much debt it cannot be paid back. And what can't be paid back won't be paid back. And when debts aren't paid back and they are defaulted upon, what that does is it shrinks the currency supply, which is the definition of deflation. And that creates a cascading spiral effect. As other people try to service their debts, there are fewer dollars to go around, or fewer euro or fewer yen, whatever currency unit you're using, there's less of it to go around to be able to service that debt. And that causes other people to default on their debts, to declare bankruptcy. And then that makes it harder for the next round. It shrinks the money supply and threatens to collapse the whole thing. So we've been talking about this. Again, I've been beating this drum for a year and a half that this was coming. I believe it's here now. I was wrong about ground zero. It looks like that's China. But guys, this is going to be, again, catastrophic. Buckle up. This is going to be akin to the Great Depression and the severity of the economic contraction and crisis that we're going to see emerge in the months ahead. It will not, I believe, last as long as the Great Depression. I think it'll be probably 12 to 18 months. As I said, once these types of things start, they're very hard, very difficult to stop. But they will do everything they can. And I think what ultimately they will do to stop this is we're going to see stimulus checks and government handouts that make the pandemic period look like a drop in the bucket. Checks from the governments all around the world are going to go out to the citizens for groceries, for rent, for assistance of all types, and they will simply print more and more currency to offset the shrinking currency supply from all of the bankruptcies and the deflation that will take place. Ultimately, I think that printing is going to come in the form of what we would call central bank digital currency. And the way they'll probably do it, they won't even call it that. They'll just say, your account is now with the central bank rather than your local bank, because the central bank can't go bankrupt. So your account is safe here. And when we see this implosion happen, it's going to cause panic because, again, we've talked, we don't have time in this video to go into everything, but we've talked about the financial markets and the house of cards, the Ponzi scheme of the monetary system. This is going to cause a lot of people to lose what they thought were safe assets. And then the only way they're going to be able to get those back is by taking the central bank digital currency replacement of that. So, think about if the cash in your bank account was no longer there, if the stocks in your 401k were no longer there, but they said, we can restore those things, but we're going to have to do it using the central bank digital currency. Most people would accept that. And I think they're actually going to set, one of the selling points of this new system is going to be the surveillance ability, the programmability, the very thing that concerns us about these things. They'll push out there and they'll say, well, this will stop fraud. Because inevitably, when this takes place, when we see the market plummet, we're going to see another Bernie Madoff. For those who don't remember, Bernie Madoff was at one time considered held in high regard among the financial community. And he was running a fund that many people had put their entire life savings into. And it turns out it was nothing but a Ponzi scheme. He hadn't put that cash into any investments. He was just running a Ponzi scheme and living a life of luxury. And it worked for years until the market plummeted and people wanted their cash and he didn't have it and the whole thing fell apart. Well, they'll be able to say, well, if we have central bank digital currency, if we have this digital currency where we can see what's happening, somebody gives their cash to a person like an investment advisor, and we'll be able to know if they invested that or if they bought a yacht with it, whether they bought stocks or bonds or whether they took a trip to Europe. And so we'll be able to prevent things like that. We'll be able to prevent these hedge funds from telling two different banks they need a loan and offering the same collateral. The banks couldn't know that, but we'll know that. So they'll sell this along those lines. But that's what's coming. It's coming on the other side, not next week or anything. But massive inflation from printing, central bank digital currencies. That's going to be on the other side of this crisis. In the meantime, in the short term, what should we expect? Well, again, banking crisis. We've talked about a bank holiday and what that means. The last one we saw in the United States was during the Great Depression. I would be prepared for the financial system to be closed for a couple of weeks, at least a couple of weeks. So make sure you have food on hand, a deep pantry. Keep your gas tank topped off as often as you can. It doesn't hurt to do those things. If I'm completely wrong, and who knows, maybe I am, then all that means is, well, you bought the food you were going to eat anyway a little bit earlier. And you know what? Do you really think that that food will cost less 6 months from now? So it's probably a pretty good investment to buy some canned goods now and eat them later when they would cost more if you bought them later. And it doesn't hurt to keep your gas tank filled up because you're going to use that anyway at some point. But be prepared, because when the credit system freezes and they have to shut all these things down, we're going to learn that the world moves on credit. Credit is the oil and lubricant of the global economy, and everything comes to a screeching halt without it. So that means the grocery stores don't get food deliveries, the gas stations don't get gasoline deliveries. Everything stops. So be prepared for that. And, the number one thing you can do to prepare for all of this is to make sure that you know Jesus. Because, guys, all this stuff, I know it sounds scary. There's nothing to be afraid of. When you know Jesus, you have built your life upon the solid rock, not the shifting sand. So when the storms of this world come, you can weather those storms rather easily. And so prepare yourself mentally, spiritually, emotionally. Make sure you have people around you that you can rely on. Make sure that you're reliable to the people around you. Look for ways to serve the people around you. Make sure you're sharing the good news and the hope that you have in Jesus. Because when all of this happens, it'll be a perfect opportunity to share the good news with somebody you love, because a lot of people are going to be scared. That's simply the way it's going to be. So if you're prepared and you know that this is coming, you'll be able to share with those people, and they'll wonder, why are you so much at peace right now with all that's going on in the world? And you can tell them, you can say, I'm at peace because I know the one who gives a peace that surpasses all understanding. The world cannot offer the peace that Lord Jesus offers us. So as a wonderful witnessing opportunities are right ahead of us. So make sure you're preparing for that. And we'll see what happens in the weeks ahead. Again, we'll keep our eye on that 2-year, 10-year spread. We'll see when that goes positive. I think that's when, again, it's buckle up time. But I think we're in the global depression. I said back in October, I think as of then we were in it. The headlines we looked at today seem to confirm that, because with Japan and the United Kingdom both declaring they were in recession today, that means 2 consecutive quarters of negative economic growth, economic contraction. So we're seeing this data start to come out, and that tells me this is going to accelerate in the weeks ahead. So come here and we'll keep talking about this right up until when the rest of the world starts to talk about this. And then we'll start to talk about what's coming after that. Because we're going to stay a step ahead of that stuff. If you're, you got to stay ahead of this stuff in order to protect yourself and your family. So leave your comments below. Let me know what you think. Make sure to hit the like, share, and subscribe buttons. And God willing, I will see you on Monday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.